Let's get started. Good afternoon and welcome to this webinar, Green Euro Rising, Positioning the Euro as the world's green currency. Before I hand over to our moderator, I briefly wanted to welcome you on behalf of the Heinrich-Böll Foundation's Brussels office. My name is Anton Möller and I'm heading the program on green economic and social policy here with Böll Foundation in Brussels. As a little background on us, we are the German Green Political Foundation affiliated with the German Green Party. Our primary task is political education and advocacy in Germany and abroad, with focusing on topics of ecology, sustainability, democracy, human rights, non-violence, and justice. As a think tank for green visions and ideas, we are part of an international network with 34 offices worldwide and partner projects in more than 60 countries, including my workplace in Brussels. To get into today's topic a little bit, when we published this paper that Jens and Agnieszka will present today, the question of Euro internationalization seemed a little bit like a topic for the connoisseurs of political economy, a discussion that has been about for years without quite gaining traction and quite moving so fast. Though things look very different today, with words like de-dollarization suddenly appearing in the news, the Eurogroup intensely discussing where the euro should stand in the world, and central banks scrambling to reorganize the financial plumbing that suddenly seems very much in motion. This is largely driven, of course, by the signals we receive from the White House, which appears to understand the international role of the US dollar, not as an exorbitant privilege, but as a perceived driver of economic decline. And the weaponization of monetary policy in disputes over tariffs and territories have sparked fresh interest in the international role of currencies, and especially in the international role of the euro. With this paper, Agnieszka and Jens gave this discussion two spins. How can Euro internationalization support Europe's position in a new multipolar order, and how can it advance the green transition? And I think despite all the new movements, these two questions remain quite central in the debate. And I'm really looking forward to hear Jens and Agnieszka presenting it, and Heather to discuss. So before we get into medias res, a big thank you to our speakers. Thank you, Agnieszka and Jens, for writing this paper, for presenting it, for discussing it with us. Thank you, Heather, for joining the conversation, giving your reflections. And lastly, thank you for Katie to moderate for us. So with all that said, thanks a lot and hand over to you, Katie.
Thanks, Anton. For those who don't know me, I'm Katie Martin. I'm a markets columnist at the Financial Times in London, and I'm really happy to be discussing this topic today because it's been really central to a lot of the work that I've been doing here at the Financial Times over the past year or so, and our readers are hugely interested in it. The backdrop here, of course, is that the world has changed since the re-election of Donald Trump, and companies, investors, and governments all over the world are looking for alternatives to US assets and to the US dollar. Now, on the dollar, some of this has been underway for some time, of course. The freezing of Russia's dollar assets after its full-scale invasion of Ukraine 4 years ago pushed more reserve managers into gold, for instance. But Trump has supercharged these efforts. Now, I spend an unhealthy amount of my life speaking to big investors, and inside the US, it's pretty much business as usual for money managers. But outside the US, everybody is talking about the need to diversify their portfolios into emerging markets, into Europe, into Asia. And they're taking steps to hedge away the risk of further declines in the US dollar, which was really corrosive to global portfolios last year. So in among that, Europe can obviously see a massive opportunity to integrate the euro more deeply into the global financial system. And this means a few things. Yes, it means more joint borrowing. Progress there is slow, but the appetite for EU bonds is super strong. And it means making the euro a bigger reserve currency. But that's not all. It's more about boosting the role of the euro in global trade and in capital markets. Now, none of this is easy, but as we're discussing today, the opportunity could not be clearer. As the paper that we're going to discuss today notes, the pound was the currency of the coal age. In the post-war era, the dollar took over its role as a global currency with a crucial role for the pricing of oil in dollars. Today's clean energy era will also need to be funded, but in which currency? So here to discuss all this with me today are the authors of the paper, who are Agnieszka Smalenska from the London School of Economics and the Polish Academy of Sciences, Jens van Klooster from the University of Amsterdam, and also Heather Graby from Bruegel. So I'm going to go first to Agnieszka. Outline for us what your thoughts here are and the makeup of this paper and where the green transition comes into this whole question about global currencies.
Thank you so much, Casey, for this introduction. I will ask Jens now to please share our slides to help me answer this question with a little bit of visuals, which we'll need to make this complicated topic, but one that we really hope to make simple and practical, more visual. Perfect. Thank you so much, Jens, and thank you for the invitation. Thank you for the support of the Böll Foundation as well. And our objective today is to talk about a concrete opportunity that the current geopolitical moment, as Katie also outlined, and Anton, is opening up for Europe. And this is the chance to make the euro the world's leading currency for financing the green transition. This is a report that we co-authored with Jens, but that builds on a lot of work that both Jens and myself in our respective fields of political economy and law for my side have conducted over the last 5 years. And it's important to say that also the picture has quite changed quite significantly in that time. While in particular, our approach builds on a broader research agenda on how monetary governance shapes the international role of the euro and on the research into the legal structuring of macro-financial regimes. While this may seem academic, our case is really pragmatic. This is about leveraging EU strengths and not being naive in thinking, as it seems to be the case in Brussels these days, that the EU can out-deregulate the US, for example. Rather, what we want to do is to make the case for the EU doubling down on the progress it has achieved thus far, which was really beginning to yield green shoots, and to play into its own strengths rather than play another one's game. Our case for euro internationalization is also one that focuses on reinforcing Europe's resilience and competitiveness. Now, this story will be familiar to many of you. The euro has chronically underperformed relative to what was promised at its launch. Still, it plays its role in reserve market and foreign exchange market is limited relative to the dollar. At the same time, the dollar dominance in these days reinforces EU's vulnerability at a moment where EU's resilience and ability to project power is critical for its economic and security well-being. The new US administration, meanwhile, has really reinforced EU's vulnerability through weaponized sanctions, financial spillovers, dollar crunches, and crypto-mercantilist strategies. But the EU's response must look forwards, not backwards. Otherwise, this will be self-defeating, and a transition to a more multipolar system at this juncture seems all but inevitable. In this context, the question is not whether euro will play a bigger role. It's also the key question is what kind of a currency will euro be in an international context. Next slide, please. Our approach that we outline in the report is shaped by a broader understanding of monetary regimes. Of course, money plays a role as means of exchange, store of value, or unit of account. But as Katie has outlined, currency is also about, there's a political dimension to currency, and there is the question of investment. And what we emphasize in our report is the macro-financial regime of monetary governance, where internationalization must be understood through the lens of money creation, including offshore money creation outside of euro's direct jurisdiction. This reframing matters in the context of the green transition because of the investment needed, and because currencies and energy systems have always been deeply intertwined. Indeed, pound was the currency of the coal age, dollar of the fossil fuel age. The critical question is whether euro can be the currency of the green transition, as Pascal Donoghue has called it in 2020. And here we come to this critical point that the euro internationalization has been neglected priority since Euro's inception, but the clean energy transition gives Europe its real opportunity to correct that and pursue internationalization with green transition at its core. Now, we see that there is a mutually reinforcing mechanism of greening the euro. We see Washington stepping back, promoting fossil fuels, restricting ESG screening, blocking decarbonization in international fora. Effectively, this means that the use of dollar for financing of the green transition might also be increasingly tricky. In fact, Katie's colleague has written just a few days ago about how America is becoming a petrostate. At the same time, access to capital and critically the cost of capital makes the investment in mitigation and adaptation in emerging markets and globally more expensive, precisely where it is needed the most. This is often attributed to local risk factors, but more often than not, it's the prudential regime and monetary systems that really increase the cost of capital. And the green euro helps address two problems at once. Europe's global leadership and currency internationalization, if actively pursued, can generate benefits share the benefits of the euro globally, accelerating green investment. At the same time, green investment denominated in euro can reinforce euro's role as the global currency. We know that trillions are needed globally to invest in climate change mitigation and adaptation. And this slide just shows how important it is to think also about the cost of capital in these contexts, showing how the weight average cost of capital in emerging markets, it's so much higher than in euro areas especially. And we have already seen international markets take advantage of the euro-denominated debt. We already saw green shoots of a green euro. The euro was the currency of green energy financing, globally playing an outsized role relative to the dollar, a really unique example of euro already playing a bigger role globally than the dollar. We've seen euro-denominated debt expanding rapidly within the EU. Green bonds and sustainability bonds have increased from 2% in 2021 to 8%, and there is a clear growing trend. Beyond the euro area and several non-euro areas, EU countries such as Poland, for example, 50% of green or sustainable debt is denominated in euros. But we also see this growing interest from international investors and also sovereigns issuing green debt in euros, most notably Saudi Arabia last year. Next slide, please. And these charts from the Bank of International Settlements show this exponential growth of green bonds, with the euro playing a really critical and increasing role. And this is not a story of course, we can explain this outsized role of the euro relative to dollar role more globally, largely by reference to the small size of the market. But I think it tells us something about the underlying, and this is the case that we make with Jens in this paper, that the role of the euro in global green and sustainable markets tells us something about in which cases can euro be particularly successful in global capital markets. And this is the case that we make in the next slide, please. Thinking about the monetary governance of the euro here. So how did the EU achieve such an outsized role in this particular segment, in this particular slice of time between 2020 and 2024 especially? And we make the case that three factors played a critical role. First, the EU played a key role as a regulator, setting common foundations for sustainability definitions, regulation that shaped both the demand for sustainable finance products, but also the supply by creating specific labels, and most notably SFDR. It was leveraging its role both as the market regulator and market participant, specifically issuing green bonds under the Next Generation EU instrument that really helped in scaling up and crowding in the sustainable and green bond market. And finally, there was a consistent and coherent policy from the central bank that was evolving at that time, both in terms of strategic integration of climate change considerations in a monetary strategy at the ECB level, but as well in terms of operational decision. And together, these three channels crafted a macro financial environment that supported investor trust in euro-denominated green debt, both within the EU and beyond. And this is exactly how our theoretical framework also identifies opportunities for euro internationalization. However, at the same time, this is a story that now is seeing a rupture, especially bringing us back to the beginning of this presentation, where Europe is in pursuit of its global role, supposedly undermining the progress it has made already.
Yeah, thank you, Agnieszka, and thank you, Anton, for setting up this opportunity to present our paper. We were really at a very early stage in some ways of thinking through what the EU's global monetary governance should look like in the light of these very rapid changes in the US at the moment. And as Katie also emphasized, we really think of this as an opportunity, right? Somewhere where the EU could really make progress, where there are things we could be focusing on that are not just defensive, but also where really the EU can achieve its geopolitical goal, but also promote some of its values, specifically in the climate sphere, by taking this issue of euro internationalization much more seriously. And I think also the story that Agnieszka just showed again illustrates the ways in which there has been policy around the euro, but it's often been very fragmented. And I think one big picture observation on euro internationalization in the past 20 years is that there have been some policies, but there's never been really a very concerted effort to push for the more widespread use of the euro. And that is suddenly, in light of the changes in the US, turning into quite a costly choice. And that also creates the space for thinking about new options. So this is the second part. I will also talk a bit more concretely about what sort of EU policies could push forward the international euro and then specifically its climate dimensions. So I think what's really important to see is just how deeply the EU has always been embedded in the dollar system. And this goes back to the Bretton Woods agreements, the 1950s, the creation of the euro-dollar market in the 1970s. Typically for Europe, international financial transactions, payments have gone in some way via the dollar. And in the early 2000s, when there was no cross-European payment systems, companies like MasterCard and Visa jumped into this opportunity. And I think that just reflects a very long history in which the euro and the EU has been grounded in a financial system that is in a deep way a dollar system. So you see that in terms of payments, and this has been very clearly weaponized in the past year, for example, against international criminal courts. EU residents settle payments in the dollar or often specifically between smaller currencies via the dollar. They rely extensively on US financial and tech firms for these kinds of payments, and particularly also for dollar payments, make a lot of use of US financial infrastructures, dollar settlement via New York. But alongside those payment purposes, I think it's also really important to see just how embedded the EU is in terms of investment and trade purposes. In the investments, EU residents invest a lot in the US, and that's, I think, now the story of institutional investors trying to rebalance their portfolios, but also issue dollar-denominated assets, right? So banks, around 20% of bank deposits in the euro area are dollar-denominated. Also corporate bonds, a very similar number of corporate bonds issued in dollar. And I think that in part also reflects the very deep ways. And again, this goes back to the 1950s, in which for trade purposes, the European firms are very much embedded in dollar value chains, fossil fuel imports denominated in dollars. At the moment, 51% of EU imports are dollar denominated, and this, of course, reflects the energy prices, but also exports, European firms competing by pricing their products in dollar with other international firms. Now, these are dependencies that go very deep, have a long history. They have strong network effects, right? Companies are using the dollar because other companies are using the dollar. Investors are using the dollar because other investors are using the dollars. And this creates a lock-in and also a very difficult coordination challenge of moving from this equilibrium to a different equilibrium. So that's, I think, very operationally, if we want to pursue this agenda of a green euro, we need to think very systemically about these different independencies and make active policy across a very wide range of policy areas. In the current situation, you have a sort of self-enforcing dynamic between, on the one hand, dollar dependence, meaning that firms are using dollars a lot for pricing, also funding themselves in dollar, still a currency that's very much geared to fossil fuels, right? US banks are currently not for most intents and purposes even allowed to screen fossil fuel related risks. And of course, that fossil fuel dependence by particularly import channel also strengthens dollar dependence. Okay, so this is, I think, the systemic problem we need to address. And there is not one magic bullet, right? So we, as Europeans, we need really concerted action across a number of different fields. And I think we've made more progress in some fields than others. So I think the issue of payments is now very high on the agenda. The initiative for the digital euro now seems to, against the European banking lobby's efforts, to go through the European Parliament. And I think that's a really, really important step forward. But in the context of removing the EU's dollar dependence, this should be in the context of setting up a more global euro-denominated payment and settlement infrastructure, right? If you retain dependence on these underlying infrastructures, you will remain dependent on the dollar, even with a digital euro. There's, of course, also, and this is again, you don't want to turn this story into a list of things you are also think are important for other purposes. But of course, the issue of EU common debt is really important for more widespread international use of the euro. But I also want to emphasize that there is a lot of member state debt, a lot of countries whose debt doesn't really function as a safe haven asset that reflects in part incomplete backstops at the ECB level. And I think there are also still steps to move forward, right? And you see here already how many actors there are on the table who could be making steps to promote euro internationalizations and whose actions in a constant way would also reinforce each other. Now, one part that we've really wanted to add to the story in our report is to look at investments, the EU as an investment region, and where credibility of all sorts of regulatory and financial frameworks are important, but the way in which the rollback of sustainability reporting has happened in the past year really has not been conducive to the credibility of these frameworks. And we think that in the medium term, it would be really good to have clear, stable, reliable reporting of sustainability related considerations, which are, end of the day, also financial risks. And then, and I think here is really where there's still a lot of low-hanging fruit, and this is also the picture you get when you look at the EU's dollar dependence. These invoicing and trade relationships are so important, and they're harder to change. But as long as European corporates are depending so much on the dollar, they will need dollar-denominated deposits. They will keep issuing debt in dollar. But here there's also still a lot that could be done. So normally at this point in the presentation, I would start talking about swap lines. But last week, I think the ECB has really made an incredibly important step forward in saying, okay, we're going to issue repo lines to any central bank that thinks this is necessary. And also, and I think this is perhaps even more important, by just saying, no, we're not doing this for price stability. We're doing this for geopolitical reasons. We're doing this because also as a central bank, we have a responsibility of supporting these kinds of policies. Now, and I think here there are still a number of very similar supportive policies that could change the invoicing landscape in Europe. I think the value chains to target are, for example, emerging clean energy value chains, and I think supportive financial policies, specifically also the monetary policy that Agnieszka already mentioned, could have a role here. I think currency denomination should be really part of trade agreements. So if you now look at European trade agreements, they have a requirement that payments should be in convertible currencies, right? So this is sort of ruling out renminbi, but obviously there is also room for promoting the euro in this context. Export insurance, immense amounts of export insurance, specifically on the member state level, is currently not yet entirely, is often entirely agnostic as to the currency denomination of the export. This is just low-hanging fruit. Why should we be promoting the export in dollars in the same way that we're doing in euro? And of course, and I think this should be a thematic point for European financial supervisors, exchange rate risks are financial risks, and looking more closely at European banks, European corporates, and the sort of risks they are taking in this sphere because of their current dollar exposures could also be a way of promoting and weaning the EU of its current dollar dependence. Okay, so to summarize what should be done, you need a pragmatic response to today's shift that with sustained and concerted action across many different fields. That means it needs action from EU and member state actors, which typically have a whole wide range of tasks and would often do this as a further consideration in policy. Think about the ECB's secondary mandate, which requires it to support the broader economic policies of the EU. And Agnieszka and I have been very adamant on this the past years. All these things we're saying are possible inside the EU treaties, right? The EU treaties have been drafted to allow these types of coordination, and that should just happen. Okay, so to conclude, there are real opportunities here. The EU is really well placed to issue a much more powerful currency. It's a very big economic area, a trade area. It has a liberalized financial market. It doesn't have all these capital restrictions that the US has. It has the credibility of being an international issuer. And in some ways, the Trump administration is really a window of opportunity. In the previous context with the US as an ally, it was much more difficult to coordinate action for Euro internationalization than it is today. And I think the current Trump administration should also be a moment to boost Euro internationalization. And going back to the chart that Agnieszka discussed about the funding costs of clean energy around the world, and of course, the funding costs are such an important part of the costs of clean energy in general, right? If you would be able to promote the international euro and provide the benefits of a stable, low funding costs for clean energies around the world, this would be an immense contribution also to the EU's climate objectives. Okay, thank you very much. And we really look forward to discussing these topics with you.
Thanks, Jens. Over to Heather.
So thanks a lot. Really interesting paper and a very interesting approach to look at the synergies between the international role of the euro and the growth of the green sector, both in Europe and also beyond. So congratulations to the authors on a really interesting way of approaching these topics. I just want to look a bit more deeply at two sides of the arguments that you've made today. One is about the growth potential and the other one is about risk. So the growth potential is a really important one because we don't know how big ESG funds could grow either in Europe or elsewhere. We see that they've taken a hit, certainly in the US because of the Trump administration's approach, but also in Europe. The way that the regulatory framework around sustainable finance has been damaged, in my view, by the omnibus process and the uncertainties that that has brought in, particularly the de-scoping of a large number of firms. This has really had an impact on the credibility of the overall framework for sustainable finance. And I wonder how much that can affect also the role of the euro. It really opens up this question of how green is the euro going to be in the future? How green are euro-denominated assets going to be when it's now possible to essentially define all kinds of activities which previously might have been seen as less than green as being still sustainable finance. Now, that process is not fully over. We've had one omnibus. There's more changes to the regulatory framework to come. But I think this is a very important consideration that isn't there in the debate about the sustainable finance framework, is how much might this damage the credibility of the euro as a denomination for green finance. So I think that's a really interesting area to think about on the growth side. And it, of course, also affects European global leadership in this area. Having said that, however, renewable energy investments in particular are continuing in Europe. There's no question that it's still being built because, you know, we in Europe have no option to drill, baby, drill. And therefore, fossil fuels will remain very expensive for us. And the idea of switching from Russian gas to US LNG as our main fossil fuel import starts to look less and less exciting and more risky as time goes on. So I think that euro-denominated debt for renewables investment is going to be part of the uses of the euro that's going to hold up. So I think from that point of view, you know, the markets are right to continue to see that as a good investment. But when it comes to the joint borrowing, which you pointed out that the way that the EU has become much more of a debt issuer, and you pointed out it's market participant because of Next Generation EU and so on. But of course, the next round of joint borrowing that's happening is for defence rather than for green investments. So how far will those also boost the green side of the European economy remains to be seen. I think in some ways there could be some unexpected linkages because in fact security also requires energy security. The military is heavily dependent on civilian energy supply lines. It doesn't have an independent supply line of its own. And so switching from fossil fuels to renewables creates more autonomous energy sources for the military and so on. So some of these linkages between defense and sustainability may help in that respect. But overall, you know, let's face it, the joint borrowing that the EU is doing under SAFE is not for green purposes, it's for defense purposes. That's where the growth market is. So I think you need to factor that into your considerations about how it will affect the euro. And then just the final point is perhaps a more positive one about the way that regulatory frameworks are developing in ways that would boost a more green euro. And that's really about the fact that once you've started to see climate and environment risks, it's very hard to unsee them. So Trump may claim that climate change is a big green scam and be reducing the amount of scientific evidence and other kinds of revelation of climate risk. But both the European Central Bank and national central banks are increasingly requiring more in terms of disclosure of climate and biodiversity and other environmental risks. We've seen that with the most recent guidelines from the ECB on climate risk and disclosure, also collateral requirements. And we see the way that central banks are starting to factor climate and environmental risks both into their financial stability mandate, but also increasingly into their monetary policy mandate, because they can see the inflation impact of, for example, rising food prices because of climate impacts. So on that side, I think on the risk side, that is going to have an impact on the financial sector across the Eurozone in ways that will also affect ultimately the currency. And I think that could be a very interesting area to explore in future work in this space. Thanks.
Thanks, Heather, and thanks, Jens and Agnieszka too. And we're going to open this up to a discussion. If you're watching this online, please do post a question if you'd like to. One question that's come in is around, actually, and thank you, Emilia, for this question. The real green superpower at the moment is China. I think I'm right in saying it accounts for something like a third of the global spend on green technology. It's going all in on solar. It's going all in on wind. How does that interact with the euro's role as the funding currency for this, if you like? What steps do we have to take to make sure that Europe plays that crucial role and that it's not usurped by China on the financial front as well as on the practical front? Perhaps I'll go to Jens on this.
Yeah, no, that's a really good question. So let me make 2 points on this. So the first, I think it's very clearly true that China has been very, very keen on both supporting clean energy investments and also reducing its dollar dependence. I think both have a very clear security background, right? Also responding to some points that Heather raised from the early 2010s onward, really identified its own fossil fuel dependence as a huge security liability, also an economic liability, and taken efforts over a longer period of time to build down that dependence. And I think there the EU has really been sleeping at the wheel, also in the sort of assumption that cheap fossil fuels would be around and the US would retain its role. And I think that also illustrates the sort of time frame that we're talking about all of these things, right? So, okay, yes, the European Parliament has made some really and the Commission some unsensible decisions on the frameworks. But I think a lot of the really big shifts in terms of the currency and energy mix, they take place over a decade, right? And I think specifically also with the military investment, we should be looking at this, right? If you're looking at what Germany is currently investing in, all these legacy tanks and fossil fuel equipment, why are they not doing more with drones? Why are they not doing things that we can actually plug into our energy system? So it's again, right, there's really a lot of these sort of long-term decisions that we would need to make. But, and I guess that's also a bit in the question, the China is now taking up this space. Can the EU still wiggle itself in, right? Now, I think that's a very legitimate concern. I think China has been also, with its very supportive monetary policy, very effective of creating a space for funding clean energy investments. But China also has clear weaknesses as a global currency issuer. And I don't think we talk about that enough, right? They have a really strong manufacturing sector, but they have a very extensive net of capital controls. They have been able to get some renminbi settling, but actually very limited renminbi invoicing to happen. And I think the EU, with its credible institutions, with its also institutional strengths, is actually in quite a good position to do this. And this is not something that happens in 2 years, but I think if you look at the big history of global currencies, there's very few autocratic countries that have managed to do this, right? Going back to the Italian city-states, going back to the Dutch Republic, it's always democracies, their transparency, their credibility that back global currencies. So I think there are still things to win for the EU, but we do need to do the work, and that's there's still a lot of things to do there.
Yeah, as you say, there's a lot of work to be done here, but I'm wondering who has to do that work. Is this an EU mission? Is this an ECB mission? Who has to take the leadership here? Obviously, Christine Lagarde from the ECB has spoken a lot about this global euro moment. But Agnieszka and Heather, I'd be interested in your thoughts on this. Like, who has to take the reins here? It feels like this project needs a champion.
Thank you so much for this question, and I think it's I'll start and then pass on to Heather. I think here actually, what we try to say with this report especially is the need for collaboration and concerted action. Of course, there is a particular responsibility that the ECB has because of its mandate, because of the toolbox at its disposal. However, and this is not a surprise that, for example, I mentioned the euro as the currency of the green transition has been a term coined by the president of the Eurogroup at the time. There is a sense that the political bodies, including EU Council and European Commission, have also to play a supportive role in those aspects of supporting the internationalization of the euro that are within their remit. So that is, for example, consistent incorporation in trade policies like Jens has mentioned, or indeed promoting a consistent financial regulation regime. So there is a role for the EU Council and the European Parliament. I think what we are trying to make the case for with this paper is the need for concerted action with shared responsibilities for euro internationalization, because this is not just the question for the central bank. This is very much in the interest of the resilience and an accelerated transition of the EU and its place in the world more broadly. And if I may, just to respond to one of the points that Heather mentioned about the the inconsistency about ESG and the growth potential there, I think this really clearly links as well about with the need for concerted action and everyone pursuing their respective roles. So I would say that we can look at the green ESG market segment as a laboratory. This is not about labels, whether something is green or sustainable. This is about consistent integration of climate change risks, but also opportunities in how we think about financial systems and the role of money and currency in that context. So I think labels are clearly important, but I think what we will see increasingly is certain types of investments that may or not be called green or sustainable, but that are consistently integrating in how they think about the physical or transition risks and how they identify opportunities with regard to future investment possibilities that consistently integrate these factors. So it's not about labels, it's about the consistent integration and concerted action.
Yeah, I would say that the other way of putting what Agnieszka just said is it's about leadership and recognizing that the Trump administration's vacating of a whole field of finance and of economic activity that is there in all of these different green activities and parts of the transition, not just renewable energy, but the circular economy and a whole range of other things, that this is a big opportunity for Europe. If the US is not there, then Europe needs to step in, not only for the sake of the planet, but also because their investors want to go into these sectors where they can see the growth potential for the future. So there's a real comparative advantage that the EU could build on here, where it has a currency that's not the dollar, but which is, as Jens was pointing out, backed by, relatively solid rule of law, democracy, and, reliable political and governance structures, plus a supportive green regulatory agenda, which makes it easier for investors to get information. Unfortunately, because of the omnibus, a bit less easy for them to get the data that they need, but nevertheless, it's much better than the US or China for that matter. So you've got a lot more transparency, a lot more data availability. And the EU has this big advantage that it can link up the green agenda with economic security, with competitiveness, even with defense. And so I think having the kind of holistic vision, integrated approach that Agnieszka pointed to, ultimately is about a kind of leadership in this field, which could bring in a lot more investment. And I think that's the trick that's getting missed in, for example, the European Parliament debates about it. There's this constant assumption that the green transition is a burden and it's an automatic negative for businesses. But no, it could be a big plus for investment and particularly for European businesses.
Yeah, all important points there. And one thing that stems from a question that's come in here from Andreas, thank you for your question, Andreas, is that how does this project to make the euro the world's dominant green currency, or arguably it already is, but how does that interact with the fact that a lot of the financial infrastructure is US based? You know, the banking is one of the kind of great American success stories, but also so is financial data, and so is ESG data. And so there is still a huge reliance there. There's also, you know, we're so reliant on the US for Visa and MasterCard. You know, this is part of such a massive set of questions. So does Europe still need the US to make the euro a successful global green currency? I'll pick on Jens for that question first.
Yeah, so I guess there are legacy advantages and disadvantages, right? And it's often, if you've been leading on something and you've been doing something for a long time, you have a lot of infrastructure that, you know, is very solid, but that might also not be entirely up to date with the times. And I think you've seen that now in the US, where they have, when it comes, for example, let's first focus on payments, right? Have been very hesitant to do anything on digital central bank money. I think they're now rushing, you know, in a bit unthoughtful way into stable coins. And there's very little that the US has done in terms of really building out the financial infrastructure for the 21st century, right? So I think in general, there is a lot of opportunities. And I think Andrea's question really nicely identifies some of the things you could be thinking of by using more digital payment structures, by really leveraging also more decentralized ways of payment and settling infrastructures. But for example, as he suggests, also making a lot of the information that you would want as a reader, as an investor, available in different ways. Now, currently, of course, a lot of that infrastructure goes via Bloomberg, right? I guess that's sort of where you would expect a lot of that to happen. I mean, the example of this story, right? If you look at the Bloomberg keyboard in terms of like, okay, how much innovation is there? But I think a lot of these sort of smaller innovations by which you also from a practical infrastructure perspective make the euro more competitive, that's the sort of things you should be thinking of, and where I think we've also not really explored all the options that are available.
Agnieszka, what are your thoughts there? Are we still, you know, we do need the US, and glorious isolation is not as great an idea as it seems.
I think this really nicely ties in with the point raised by Micah Schmidt on the question of monetary hierarchies and dominance of individual currencies, because this is, I think, what we are trying to say in this report is not necessarily that we want, you know, euro dominance the way that we think about dollar dominance today, that Europe, for a number of reasons, is more sensitive to different interests of different actors, possibly also in terms of, possibly also we would like to make the case for a system that is not necessarily extractive and built in order to weaponize interdependence. But that's why we also, in the way that we phrase the presentation today, this is also about sharing some of the benefits of the euro in the context of global challenges that we face. So this is to say that this is not about replacement. Of course, there is a collaboration needed, and of course, there is still a lot of interlocking. But I think the case that we are making is that in a more multipolar context, this doesn't have to be either or, and that's also the point about not playing by the rules of the game that was set, but rather create maybe a fairer system of rules there.
Yeah, this doesn't have to be either or, but I mean, we've seen some live examples in the past few weeks of the US is extremely allergic even to the suggestion that Europe might not buy treasuries, for example, US government bonds in the sort of volume that it has done in the past because of political, ultimately, motivations. Heather, what are your thoughts around how delicately does Europe have to tread around the US here? It doesn't want to be seen as a threat. It wants to be seen as complementary. It wants to be seen as taking on a role in an industry that the US very obviously wants to vacate. It does not want a role in global green finance. So how does it thread its way through that?
Well, and it's also about what kind of public political debate to have around how much are we in Europe prepared to pay to take on a leadership role if the US is vacating. You know, who's going to pay for the costs of developing more autonomous systems, for example, for payments, digital euro, these questions about alternatives to MasterCard and Visa and so on. Is that something which you know we're prepared to pay for when the US has been so kindly providing these things for free? So you know the exorbitant privilege also comes with some costs there, and that's a tricky thing. And we still see some of the members of the euro, even the member governments, are nervous about the idea of a larger international role for the euro, as for example as a reserve currency, because of the potential impacts it could have on inflation, and the fact that there might be more turbulence, the value of the euro could be more volatile, which would affect their economies if it has more of a reserve currency role. So it might make it cheaper to borrow in for sovereigns in Europe, but it also has some downsides. And that debate is only really just starting. And I think that's the tricky part. You know, which parts of the US role and the dollar role do we want to take on, and which ones do we want to avoid? And then there's the issue that you just raised, Katie, about how not to really annoy the US in the process, because they would also like to keep the exorbitant privileges and reduce the costs. So that's something that it's now very hard to negotiate when the transatlantic relationship is not as good as it was, and you don't really have an international forum in which to discuss this.
Yes, it's about not annoying the Americans, but it's also partly about not annoying the Germans, right? The idea that this lowers borrowing costs for Europe is certainly true for Southern Europe. But, you know, what are the sensitivities within Europe around doing this, do you think?
Oh, I think there are definitely sensitivities, because member states get, Euro members get different things out of their Euro membership. But let's not forget, though, things have changed a lot for Southern Europe. You know, what were called pigs during the Euro crisis are economies that are now doing very well. And some of them now have lower borrowing costs than the core Euro members at the very beginning. So, you know, there are swings and roundabouts here as well. And on the green transition, I think a really interesting question is which European economies are going to end up being the leaders on the green transition. So we've got some which are investing a lot more in renewable energy now than others. And again, those can be seemingly peripheral members of the euro. You know, Spain has made a lot of investments recently, Germany somewhat less. So how will that play out in terms of also their domestic investments in the green economy?
Sorry, you were cutting in and out for me a little bit there. I have a feeling my computer is trying to die on me, so I've just moved to try and keep it alive a little longer. Jens, I know you've written as well in the past about these tensions within Europe. What's your sense of how unified the purpose is here towards getting this done?
Yeah, no, I completely agree with what Heather just said. I think this is sort of the elephant in the room, that once you start looking at all these individual policies, they have clear distributive implications. There will be different views on the debt aspects of this. And that's why I think some coordinated political decision is also needed here, right? And there will be trade-offs, and this should factor into the broader debate that's just going on about safe assets anyway in Europe. But I think very specifically on the funding costs. So if you would have more appeal internationally of the euro, that would not just affect the funding costs of governments, right? And I think one of the underappreciated advantages for the US has also been the funding costs of its capital markets, right? And why do you have Silicon Valley in the US? That also reflects this specific structure. Now, to go back to Germany, with a German think tank, Data nach Zukunft, we sort of try to model these different aspects. On the one hand, the lower funding costs. On the other hand, also potential appreciating effect of the exchange rate also impacting exports. And we think these things sort of balance out, right? So I think it's really important to see, yeah, there are advantages and disadvantages of an international currency. It's not just a free lunch. but doing the right policies, thinking where you want to internationalize, seeing where to advance, I think that's really where you can win things. That's just to make Agnieszka's point again. I think the aim should not be we want to become like the US with its dollar and all the also social implications of that, but to look much more smart. Where do you want to promote international euro, and also where do you want to become less dependent on the dollar, right? Because I think if you think about the 2008 crisis, if you now would again have so much dollar borrowing by European banks investing in European assets and a similar unrollment of that, would there be the swap lines? Maybe not. And I think this sort of changes the calculus at the moment, right? I think this is really a moment to push forward on these things because there are these vulnerabilities that you could be bringing down.
I mean, that point around politicizing swap lines could not be more important here, right? It's just it's an incredibly big moment in the global financial order. Agnieszka, really quickly, sort of reflecting some of the questions that have come in, and some of the discussion that we've had here, that there is a view that for the US, the dollar's reserve currency status has become a burden. Do you think that would be a nice problem to have, right? Do you think there is any danger that at some point in the next decade we will look back on this discussion and think, what have we got ourselves into here?
Such an interesting question. I'm not sure if I can answer quickly, also because one of my reflections from today's discussion is that in the context of internationalization of the euro, we really need to bring in consistently all of these different perspectives that we did today, both from the financial sector, the political economy, the politics, industrial policy of the transition, and also really reflect on the transformation of the EMU over the last 20 years since the great financial crisis. Right? Of course, there are risks, but I think here there is also a clear case for EU being confident about the choices that it's making. And what we've seen over the last few years is the EU in the face of multiplying sources of danger, and it really plays into the game that others set. So it seems to me, whilst this is unintended consequences, it's something that absolutely needs to be thought through. I think the priority, as Heather underlined, is it's time to take leadership.
Yeah, absolutely. You dealt with a lot there in a very short space of time, so well done. We are going to have to wrap up this session. Just, I think, to summarize where we've got to with this discussion, I think that the key takeaways for me are, firstly, urgency. Europe spends a lot of time thinking about these big questions. It's very thoughtful, and that's a blessing as well as a curse. There is a sense of urgency that really has to be injected into this debate from my point of view, and that also, as Heather was stressing, involves leadership. It would be great to see a person or an institution really grab this with both hands. The second thing for me is that I think we need to move away from this idea that a fully functioning global euro is a nice to have. This is a strategic imperative for defense, for energy, for the euro as a political force. All of this is wrapped up into the role of the currency. So I think, as we were discussing, we shouldn't be shy about wanting to push this forward. The Trump shock has been a big shock to the system, but I think we should be very, very aware of the fact that, elections are what they are, and we could be back in this position, having this conversation every 8 years. And that's not a nice place to be. And it would be well worth, really, really pushing forward. The third point that really sticks out to me is that, yes, progress can be slow. There are a lot of competing interests here, both within Europe and in terms of Europe's relationship with China and with the US. But these things do change. Sterling was the world's global reserve currency once, and these, very slowly and surely, these sort of certainties that we have about how global finance works, they do change. So, at the very least, I think Europe should be aiming to offer a hub currency for a certain part of the multipolar world. That has to be the lowest kind of bar that it's looking to clear here. But the work has been done, but a bit more urgency and leadership would really help here. So we're going to wrap up this discussion now. I hope if you've been watching, you've found it useful. Please do get in touch with any of us with any kind of thoughts that you have on this. We'd all love to hear from you. And thank you, Jens and Heather and Agnieszka. And thanks for involving me in this discussion.
Thank you.
Thank you so much.
Thanks.